What is a stock? Well, a stock is a piece of ownership of a company, often referred to as a share. So you buy one share of a stock or company, and you are essentially an owner of that company, and you receive benefits for owning that stock. Sometimes it can be negative to own that stock, which we'll go on in the future to discuss that. Why do stocks exist? Well, a stock exists because a company wants to raise money or capital to expand their business by buying new product, investing, paying their employees, making their CEOs extremely rich, whatever it may be. So at the initial stage, an IPO, which is when a company is private, it raises money at the IPO level. So when the stocks are first offered to the public, it gets that money and it can expand and do whatever it will with that money. So once it's bought by individuals like you or I, um, it then goes to the secondary market. So that person who bought it sells it, it just stays between them. It's no longer with the company. The company has the ability to buy its stock back, but we'll discuss that in a later video. Just be aware stocks exist to raise capital for a company and essentially make money for investors like you or I. Where do you buy these stocks? Well, in order to buy these stocks, you have to open an account with a brokerage firm or an investment firm, and you can purchase shares of a company through that account. And I'll do a separate video on this, but just understand you have to create an account with a brokerage firm or investment firm, and then you can make these investments within the company. What determines a stock price? This is based on supply and demand. So when a company is private and it goes public, it'll hit the market at a certain price, let's say $25. Let's say that there's a lot of demand for this stock for whatever reason. Let's say it cures cancer or allows some great technical innovation and everybody wants to buy this stock. That stock price will go up. And majority of the times when an IPO happens, so an initial public offering, that $25 price, it typically goes down depending on the company, but it's that price is based on supply and demand. And the same thing works. So let's say that a company comes out, it's in a lot of debt, which typically happens. You'll see a lot of these companies that go public, they don't earn a profit. So you have to do your research. And let's say because they don't earn a profit, they don't have a very good product, the less interest or bad news results in lower stock price. Why would somebody buy stock? It's simple, to earn money. And you earn money by buying a stock at a certain price and selling it at a higher price. And just be aware, you do have the ability to sell stocks and then buy them at a lower price. That's called short selling. I typically don't recommend that, and I won't really do a whole lot of videos on that, but just be aware that there are other options. And maybe somebody might buy the stock because they just believe in that company. I typically don't see the benefit of that. I'd probably recommend people go out and buy that product instead of the stock, but you buy stocks to earn money. Some examples of stocks that you're able to purchase: AT&T, which is the symbol T, Ford, symbol F, Tesla, symbol TSLA, General Electric, symbol GE, Microsoft, symbol MSFT. And I do not recommend purchasing these companies. I'm just giving examples of these companies. So when you go to, let's say, Yahoo Finance or your brokerage account, you type in that symbol, type in T, it'll bring up AT&T, and it'll give you the price. This video is not financial advice. Any statements made are my views and is for entertainment purposes only and should not be taken as financial advice. Do your own research before making any financial investments.